Hi, this is Kmo. This podcast is brought to you by Majuba TVET College and it specifically relates to financial accounting and 5 for South African TVET colleges. In this presentation, I'm specifically going to focus on question 4.2.1 of June 2016 question paper. That question related to a topic referred to as incomplete records as contained in Module 4 of Financial Accounting and 5 textbook that is used at Majuba TVET College. I'm hoping that students will achieve the following subject outcome at the end of the presentation, that is, transform incomplete records to a system of a double entry. And I'm hoping that students will attain the following learning objective, that is, reconstruct debtors control to determine the value of sales. As I've already mentioned that I'm going to look at question 4.2.1, I quickly want to take you to the question paper. There you go. 4.2 was part of question 4. I'm specifically going to do requirement 4.2.1, specifically relating to debtors control. Let's see the given information. We're given the financial records for BB stores who did not keep a full records of transactions. So these are incomplete records. And that's the given information for 28 February 2015. In this case, we're going to have to reconstruct the debtors control in order to determine the amount of sales. So yeah, that was essentially the purpose. We wanted to determine the amount of sales. Therefore, we're going to use the debtors control account. Remember, when you do the debtors control account, what happens is you can sometimes be required to determine the closing balance, but in this case we have both the opening and closing balance, therefore, and other items relating to the debtors control account. Therefore, the balancing figure in this case will not be attributable to the closing balance. However, it will be attributable to amount of sales. Let's quickly go to the Excel spreadsheet. There you go. That's the Excel spreadsheet that we're going to use. This is in the form of a T. It's a debtors control account in the form of a T account. Remember, debtors control. Debtors is an asset. An asset, as you know, increases on the debit side and decreases on the credit side. And the T account has a debit side and a credit side. Okay, without wasting your time, let's just go to the information and see how we're going to use the information to complete the debtors control. One thing I'd like to mention, not all information relates to debtors, so it's important that you're able to identify those transactions that will impact the preparation of debtors. The first transaction relates to the balance of debtors on March 2014, and we're doing 2015. Therefore, that is referred to as the opening balance. I'm going to take the opening balance, copy, I'm going to paste it there. Remember, we always take the opening balance relating to assets to the debit side of that specific account. So this is called balance. We refer to the opening balance as BD, as balance brought down. There you go, moving along swiftly. The next item that I'm going to take the closing balance. It still relates to debtors. It's the balance on 28/02/2015, and that's exactly where we're at. Therefore, that balance is referred to as the closing balance. I'm going to write it there. And I'm specifically going to say balance. Remember, we refer to the closing balance as a credit, as carried down, and remember it's taken to the credit side as well. And it's always important that you take that closing balance and you transfer it there, and we call that balance brought down. So in the next financial year, that will be our opening balance. That is in 2016. It's always important. Most students forget to do that and they lose an important principal mark. Okay, moving along swiftly, let's see what else impacts preparation of debtors. Those two transactions do not impact the preparation of debtors. They relate to balances specifically for creditors control. Payments to creditors, it clearly says it's payment to creditors, please don't take it. Payments to debtors, definitely we're going to take that amount. Remember, this was a payment by debtors. It was a payment by debtors. I'm going to take that amount. It decreases your debtors a balance, therefore it's taken to the credit side, as we've mentioned that transactions that decrease your debtors, that is an asset in this case, will be taken to the credit side. That specifically relates to bank. Just quickly let me explain. We cannot clearly, it relates to both debtors and cash sales. When we reconstruct the debtors control account, we're going to take that amount and put it under debtors control, because we do not have the luxury to clearly distinguish between payments by debtors and cash sales. So we're just simply gonna take it to the entire amount to debtors control. The next item is returns by debtors. Definitely it will impact debtors. In this case, it reduces the amount of debtors, and this is debtors return, if you like. Debtors returns. There you go. Remember, it reduces the amount of debtors control, as customers of the business are actually returning goods in this case. Okay, moving along swiftly, that affects creditors. Please don't take it into account. Discount allowed to debtors to encourage them to pay on time. We're going to take that amount, we're going to put it on the credit side because it reduces the balance of debtors. The contra account will be discount allowed. Discount allowed. There you go. Discount. I was suspecting my spelling. Let me fix it. Discount allowed. There you go. The next transaction relates to discount received from creditors. Of course, it will affect creditors. We're not going to take it into account. Make sure that you always go to additional information. There could be information that you need to take into account in completing your debtors control account or your creditors control account. In this case, we're given a debtor who owed 520. Definitely this affects your debtors control account. Was declared insolvent. His estate paid 35,000, and this has been added to payments by debtors. Therefore, the 5,200 has been taken into account. We're not going to take that into account. The remaining, well, not the 5,000, 35, the 35% of the 5,200 has already been taken into account as a payment. Therefore, we're not going to take the 35% of the 5,200. However, the remaining balance, which is 65, you simply say 100% minus 35 to obtain the 65. The 65, the remaining balance, must be written off as bad debts. That transaction has not been taken into account. It's going to reduce. So we're simply going to say 5,200, we are specifically told. The 65%, that's what we need to take into account in preparation of our debtors control. It specifically relates to bad debts. That's the contra account. That's the contra account. There you go. There you go. Nothing else. You've taken everything into account. I just want to make sure that the balances are correct. There you go. Escape. Okay, now the next thing we want to determine the balancing figure. Remember, in this case, it's always important that your debit side should equal to your credit side. At the moment, they're not equal, so we're going to take the greater of the two sides, which is the credit side in this case. Remember, this, you're not going to call this a closing balance because it has already been reflected there. It was given to you. Therefore, this is your amount of sales. Remember, your debtors will be increased by sales on credit to the customers. So we're simply going to say equals to, in order to determine the value of sales, we're going to take that credit, total of credit, we're going to minus what we have on our debit side, and that specifically relates to sales. That's it. That's how you would have gone about in preparing your debtors control account. Thank you. This is where my presentation ends.